Now, this person is a regular on our show. They really don't need an introduction. His name is Rick Rule. He's actually one of the most successful and notorious personal brands investors in precious metals, natural resources, commodities. And if you don't know him, he's kind of one of the most famed living natural resource, especially gold and silver investors. And so he has a link right there down below. And that link is for him to do a free review on your portfolio. We mention that every time. So I highly recommend that. Make sure you hit the like button on this side or this side. Leave a comment down below that says Rick Rule rules. What about that, Rick? Rick Rule rules.
That's 67. You love to be described as notorious. It makes you feel relevant.
I bet it does. All right. So here's something that makes you notorious. So maybe like 4 months ago, I didn't look at the exact date. That was a lot. We talked one time before then, but maybe 4 months ago when we were probably at 2,000 gold. We might have been just above it, or we might have just come back slightly from over 2,000, but everyone was exuberant. And I said to you before we started recording, I said, how you doing, Rick? And you said, I'm doing good. I seem to be right now one of the only people feeling good right now in the specific metals sector, but I don't know why people don't like it when the things they want to buy go on sale. So what do you mean?
Well, putting that in context, Jake, 4 months ago when we talked, the gold market, and particularly the junior gold equities market, seemed exuberant to me. People were excited by the price rise, and they were paying more attention to the price of the stocks than what they might be valued at. Given that there was not very much in the sector to buy, I began to do some selling. I've learned that if the market doesn't give you the opportunity to buy, it is in many senses fundamentally overvalued. That isn't to say that 2 or 3 or 4 years from now that these stocks won't be a lot higher than they are today. It just means that they were well ahead of themselves. Now, I suspect that the under $2 billion indexes, if they existed, things like the TSX, Toronto Stock Exchange Venture Resource Index, are off by 25 or 30%, which is to suggest, Jake, that if you're attracted to the sector, they're arithmetically 25 or 30% more attractive. It's really strange that when people go to buy groceries or household durables, that they look for goods on sale. They pay attention to what the good is worth to them and what utility it has. But when people buy financial assets, they seem to want to overpay. It's interesting to me too, Jake, that people worry slavishly about intraday price movements without having formed any opinion as to the value of the underlying asset. What's the point of having price information if you don't have an opinion as to value? Money is made on the arbitrage between price and value, or speculatively, price and what you think something is going to be worth rather than what you think it's going to sell for a year from now. Warren Buffett, who, as you know, has a reasonable track record as an investor, has been quoted as saying that you shouldn't buy one share of a company if you wouldn't be delighted to see it fall 25 or 30% in price the month after you bought it, so that you could employ the same intellectual capital that you had already spent and get a better deal on your portfolio. Now, sadly, Jake, I've tested that thesis dozens of times in my career. And it's never pleasant when it occurs, but it is a normal and necessary part of both investment and speculation, especially important for younger audiences like yours who don't need to repeatedly make the same mistakes that their elders have made.
Very interesting. So this year so far in the metals, which is primary in my portfolio, I've had 2 so far, 20 to 30%, 25 to 30, probably more percent because March, and then now 2. And one thing I've noticed looking at comments, and also looking at even things now in the media. Is Bitcoin replacing gold? And it's getting worked by everything. All the commodities up except for gold. I've seen like people commenting, "I'm throwing in the towel. I'm throwing in the towel." Does the sentiment? I understand that 25 to 30% is arithmetically more attractive. Is the sentiment of ever concern, or is the sentiment? Is it an I know you talked about the Barron's Gold Index, and the volatility of the index is a natural and normal phenomena, but how about the sentiment during a bull market?
Well, you've asked two different questions there, Jake. Let's deal with the sentiment first. I have made more money when I have been lonely. I have made more money in sectors that people are either bored of or hate or are afraid of because I've been able to buy absolute values. In terms of measuring sentiment, I am probably the least competent person you know. I did not until very recently own a television set. I don't care much about popular culture or pro sports. I can't dress myself without my wife's assistance. So the idea that I would be relying on my own instinct with regards to sentiment or fashion is sort of amusing to me. Except to say that I have made much more money being lonely than being popular. And the truth is that I still prefer making money to not.
So the fact that it is not.
As to the volatility, I just regard the volatility that we saw in March and the volatility that we see now as representing the opportunity to buy assets that I'm familiar with and comfortable with on sale. So for me personally, it's wholly good. Does it complicate my life? Sure. I read the same comment sections that you read. I read them because I'm interested in constructive criticism as to how I can be a better teacher and presenter. And I feel sorry for people who don't listen to the entirety of an interview. I feel sorry for people who haven't heard me say and come to understand you either will become a contrarian or you will be a victim. I feel sorry for people who were attracted to gold at 2000 and are repulsed by it by 1800 and pay no attention to the fundamentals behind gold. But the truth is, I guess there's only room in the world for so many winners. And there are people who will absorb the lessons that they've learned and apply them, and they will move from being, at least in financial terms, losers to winners. You said one other thing I ought to comment on too. People need to right size their investments. I've run into too many young people, yourself included perhaps, who are so narrative oriented that they overweight metals and precious metals in their portfolios. Now, while I believe that a greater risk is not owning precious metals, in other words, I think not owning gold is probably a greater portfolio risk than having too much. But the truth is that every circumstance I've ever described in your interviews reflect probabilities. People want certainties, but it doesn't matter what you want because there isn't certainty. Your listeners, particularly your young listeners, Jake, need to understand that despite the fact that I'm a pretty persuasive salesman, my theme is a probability rather than a certainty. And investors and speculators need to right size their precious metals and natural resources portfolio relative to the overall level of risk that they're willing to tolerate, and also willing relative to their psychological tolerance, both for risk and volatility. That is to say, having all of one's eggs concentrated in one basket, unless somebody works full time on that basket, is a risky thing to do, irrespective of how attractive the narrative might be.
So I definitely I was just talking to E.B. Tucker yesterday, and I just told him, I was like, I definitely, because he said the same thing to me. I said, I definitely am overweight. I mean, I have everything at a pretty good price between physicals and miners. So I'm not like, and I still have, a sizable amount of cash and, a cash flowing business. but I definitely went overweight, although I can psychologically, I know that I can handle the volatility, and I understand none of the macro is in change and we're really early. In hindsight, I probably should have balanced a little bit more, but I know over the next couple of years, and I have the cash flow and it's good. But for someone that maybe can't handle they're not being able to handle the psychology right now very well. And so now they're thinking now gold's going to go to $800 and Bitcoin's going to replace it and it's gone. What is your thoughts on the future with the metals, on right now where it's at, with this last month of the year, with 2021 approaching? What is your overall view?
Well, I need to start by saying that my time frames are much longer than you describe. It's odd that as you've been on Earth for a long time,
you're just laughing at me over here.
You become more patient, but I don't think about the period between now and the end of the year. It's just irrelevant to me. I understand from my own life that precious metals bull markets are longer in duration than most people think. The average of the last two has been about 10 years, and I would suspect we're 2 years into this one. So I'm thinking in 3 or 4 year terms. Precious metals bull markets are also much greater in dimension than people think. I can tolerate 30% index declines because my experience has been that secular bull markets, even through the declines, give me 500 or 600% returns over a decade. And so if accepting the disutility of a 30% mark to market at some point in time on the way to a 500% transition in value is something that actually isn't even an aggravation to me anymore. Now, we have discussed on your show before the 5 factors that cause me to believe that we're in a precious metals bull market. It is useful for people to refresh their memory on those and refresh their memory too on the fact that if they start ceasing to be true in any substantial measure, it's time to transfer out of the precious metals. This is not a forever trade. I don't know that there are any forever trades. It's also true one more time that it's not a certainty. It is merely a probability, and it needs to be right-sized within one's account. The idea that Bitcoin and gold are somehow competing assets has always struck me as a little silly. Maybe on the very fringe, which is to say for the greediest of all speculators, people who are looking at possible rather than probable marginal moves, maybe as a hyper-speculative asset outside the financial system, they're competing, but they have entirely different functions and entirely different utilities from my own point of view. It's interesting, too, that interest in Bitcoin has probably gone up, I'm going to say 400 or 500% after the price has doubled, which is to say the value proposition is substantially less attractive, but the price action justifies the narrative, which is true in all bull markets. If you saw in 2022 the gold price at $4,000 as opposed to $1,800, in other words, if gold became arithmetically less attractive, its audience would be tens of millions larger. And that's very instructive as to human nature. The truth is, we've said this before, people's expectation of the future is set by their experience in the immediate past. And particularly after 30 benign years of markets, people are inclined to be aggressive and bullish, which is to say that they pay more attention to price momentum than the relationship between price and value. Mm-hmm. These relationships, momentum to price and value, tend to revert to mean over time. And people, particularly younger people who don't necessarily have the financial reserves that I have, or frankly, the experience with perturbations in markets, need to keep that in mind.
Interesting. So, a lot of good stuff in there, I guess. So, secular drops within a bull market. Do you think that the reason people react this way is simply because they don't understand, they don't have the experience that you have when a 20 or 30 or 40% drop in a secular bull market? It's like you understand how it works. Just like if you had never been to planet Earth and the sun went down at the end of the day, you might get worried if you were, I don't know, some bizarre creature. You understand that these drops are like day and night. They're as natural as day and night are in this market. And do you think it's it's because most investors don't understand that, and so then they want to jump ship because if it goes down, that must mean it's over? And do you think it's a overreaction to not understanding the nature of a secular bull market, and more so the volatility of precious metals in general?
I think it's worse than an overreaction. I think it's a stupid reaction. Common, but stupid. I think, too, that most investors and speculators haven't done enough work establishing in their own mind why they want to own precious metals and precious metal stocks, or what would cause them to sell them, or what they think they're worth relative to other assets. At Sprott Global, we have a focus list, about 45 stocks, sometimes as much as 50, sometimes as few as 30, that we think fulfill themes that are particularly attractive in the market. And in each of those stocks, we have fabricated for ourselves a rough estimate of what we think they're worth at these commodity prices, at higher commodity prices, and at lower commodity prices. In other words, we focus on the company's value before we focus on the price. If we think that a company is worth $700 million, as an example, today, but with one catalyst in place could be worth $1.5 billion at today's commodity prices a year from now, or $2 billion at higher commodity prices. If we can buy that company at a discount to $700 million, in other words, if we can buy it at a discount to what it's worth, we'll load up. If we buy it at a discount to 700 million and it goes to, say, $1.1 billion, without any of the things in place that we think should have driven it higher, we will likely take a profit. It's the juxtaposition of price to value that matters to us. That's why in one of our early interviews, Jake, when you were talking about the number of stocks that somebody should own, I told you that the number of speculative positions that somebody should own should be consistent with the number of hours per month that speculator was willing to work, understanding his or her portfolio. If you don't have an opinion as to an asset's value, the information with regards to its price is of no functional use to you. People pay attention to price because it's easy information to gather. They don't have to work. All they have to do is look. And what people do too often is conflate the narrative with the price and extrapolate with those two data points without inserting the most important data point of all, which is value. But value requires work.
Do you think that the present price of miners represent their value, or is it over or under?
I think that gold miners are representing appropriate value today relative to the gold price. I think the sector gives you the upside that I think we're going to get in the gold price over the next 2 or 3 years for free. I note with delight personally that the junior sector, which is what I thought was the most overvalued sector, has declined uniformly, which is to say that the good companies have fallen with the bad, which is useful for me because I don't have to buy the bad companies. That is to say, I don't make a mistake. And I frankly suspect they'll fall a little further. There were a whole bunch of private placements that were completed over the summer. The lame, the halt, and the blind, as well as the good guys, raised a lot of money. And the hold periods are coming off those stocks. And those stocks are down. And the people who bought them, many of them didn't have an opinion on the stock. They just wanted to be in the sector. So my suspicion is that when the hold period comes off, they will sell them in disgust or for tax loss purposes. And I think that that'll represent a real good time for bargain shopping for me. You'll recall too, Jake, from earlier interviews, and the reason that I refer back to these earlier interviews is I know that many people will watch this interview who haven't watched the earlier interviews. So I don't want to assume this knowledge on their point. But I think it's important to note that if there are 2,000 junior mining companies listed worldwide, at any point in time, probably 1,700 of them are valueless, which is to say they're worth nothing. There are probably only 300 that have any real value. And of those, probably only 50 to 100 represent genuine value at these price levels. So it's important, I think, that speculators who care make, either on their own or in conjunction with an advisor, a list of companies that they would like to own, develop in their mind a sense of value, which, by the way, is never going to be completely accurate. That's not the way the world works. And then pay attention to price relative to their estimation of value. Doing that is hard. But it's what separates the wheat from the chaff in terms of investment or speculative performance.
So let me ask you, 4 months ago, when you said that to me, what caused you to say that you thought that the metals and the miners were getting ahead of themselves? You know, we just had these lockdowns, we just had, whatever $1 trillion they did, and then, due to fractional reserve lending, they could turn it into even more, and they're monetizing the debt, and they're doing this, and it's like, oh my gosh, and all these people don't have jobs, so there's anticipation that far more money is even going to come. My understanding, my overall thesis of why I'm invested in it, it seems like it's all happening in the perfect storm, yet you said it's getting ahead of itself, and you said, I even expected we might have a little further to go. What causes you to say that when it seems like there's a perfect storm here? Just so I understand, because I also do these interviews because I want to be better and smarter and learn from you. So I don't understand what caused you to say that in the first place, given all this money printing and all this stuff going on, when there's also other things rallying.
3 answers, Jake. Time preference being the first. I believe the bull market is intact for the 2, 3, and 5 year time frame, but I thought the market was ahead of itself in the very near term. In the first instance, gold, because gold trades conversely to fear, and I could see fear receding from the market. I could see the liquidity in the market going into long-term treasuries, which is to say faith in central banking and faith in the government, and I could see it go into the equities market. Gold trades conversely to fear, and fear was plateauing or ebbing, meaning that popular demand for gold would similarly plateau or ebb, not for the 2 or 3 year time frame, but rather for the 3 to 6 month time frame. The second thing was, with regards to the gold equities, I had never seen market leadership in 45 years go directly from the biggest of the best of the best, to the penny dreadfuls without going cascading through the whole rest of the sector. I had never seen the narrative take precedent over the arithmetic before in my life. And as you and I talked about 3 minutes ago or 4 minutes ago, within the junior sector, at least 80% are valueless. And there was an astonishing number of companies that were valueless that were able to raise $15 or $20 million this summer. And a market that throws a couple $2 billion indiscriminately into a high-risk sector is a market that's insane in the near term. And there was no particular point in my participating in the insanity. Just because I wanted to buy the sector for the 3 to 5 year time frame, it didn't mean that I had to compete with morons in the near term bidding cycle. And so I chose not to. In fact, I decided it was my duty to add some liquidity so those morons could gorge themselves.
Was that 2 or was that 3? You said fear and over exuberance. Was there one more?
Yeah, 3. The first was time preference.
Time preference. Okay, got it.
I'm not thinking in terms of my long position in the 3-month time frame. I'm thinking of it in the 3-year time frame. So a cyclical decline can be completely consistent with a secular bull market. The notes part of many of our interviews will say that I'm inconsistent in my message, that we're in a gold bull market and that gold stocks are overvalued. There's nothing inconsistent about that message. It's a difference between a short time preference and a long time preference. The junior gold stocks, one sector can be substantially overbought, and we can still experience in the 3 to 5 year time frame a secular bull market. There's nothing inconsistent about that, but people need to understand that market dynamic. The second was with regards to bullion, and I said that in my life, bullion had traded consistent with fear, and fear was plateauing or ebbing in the market. So it seemed to me that in the near term, demand for gold would, in fact, plateau after, by the way, a very, very, very healthy run. I mean, a straight shot with the exception of a brief dip in March from 1100 to 1900. It's normal and natural for anything or anybody to have a rest after a sprint, myself and yourself included. The third, of course, being the absurdly strong performance of the riskiest category in the mining business. Particularly the fact that valueless companies commanded $150 or $200 million market caps, while companies in the middle of the pack, sort of $5 billion companies that were generating 15 to 20% free cash yields, were languishing. It was clear that the market that existed in part of the summer was a fairy tale market. And, you know, those collective stupidities always self-correct.
So when I listen to you say this, so for me, I bought, a lot of my stuff in March and April and the bulk of it, but I'm definitely overweight. And I topped off this summer. I mean, I still could top off more, but I'm not like, I'm not like going to throw in the towel and go run to something else that's FOMO. Like I understand the thesis and I'm not that worried about it. But when I listen to what you're saying, and I said 2 to 3 years, I'm in this till I know where it's going, and I'm in this for 3 to 5, whatever it needs to be. But when I hear you say that, I'm also like, sometimes you're so logical in your descriptions that it also makes it feel bearish. Is there anything in the thesis over the next 2 to 5 years that you think right now, or any new items to the thesis that make you any less bullish than you have been, dating back to when I first met you at your office and we sat down and you're like, I think it's going to be a good ride for the next few years. Is there anything that makes you less bullish, including vaccines? You said the fear is gone. If the fear is gone, won't it keep gone when they try to tell everyone everything's fine again? So is there anything going on in the long-term thesis?
In direct answer to the question, no, nothing. The bullish factors are quantitative easing, debt and deficits, negative real interest rates, the under ownership of gold, and the necessity of some institutional investors to disintermediate from some of their bond holdings, which now have negative real yields, to other asset classes, including gold. The gold bull market, from my point of view, will be intact as long as those 5 items are in place. If you see a circumstance where central governments around the world stop debasing the currency, if you see a circumstance where aggregate deficits are half the percentage of GDP represented by economic growth, if you see real interest rates, particularly on the US 10-year Treasury, revert to mean, which is to say 200 basis points or 2% positive yield over the depreciation of the currency. If you see the market share of precious metals or precious metals related assets return to historic norms, which is to say 1.5 or 2% of the savings and investment product marketplace in the United States, then you can say that you need to be concerned about the gold bull market. Those are the facts behind the market. They aren't the narrative. They're the facts behind the market. Now, what concerns me outside of that? One thing. It might be that in the popular imagination, because equities have performed so well since their bottom in 1982, that spare cash in the market gets put into equities, that investors come to believe that the cure for declining purchasing power is buying shares of companies that have pricing power in the market. In other words, that equities themselves become the new gold. I believe that there is a place in portfolios for equities, particularly equities of high value companies. I don't mean high price, I mean high value. I think that gold and gold stocks are a very different asset class. One of the reasons that the equity markets have performed so well is because of an artificially low cost of capital. When a corporate borrower employs debt, that borrower is paying substantially less in real terms than they were 10 years ago, which artificially gooses their earnings. When companies pay dividends, those dividends are capitalized at much higher multiples than they were when the yield on savings products were higher. So it's my belief that to the extent that people believe that they can substitute an equities ETF for gold in terms of maintaining their purchasing power, that they're wrong. But the fact that I believe they're wrong doesn't make it so. I believe that there's room for both in most portfolios. I believe too, and we've had this discussion before as well, Jake, that the level of precious metals and precious metals related investment assets in the United States, less than 0.5%, means that very small changes on the margin generate very large responses in the price of the asset class. Remember that the 3-decade mean is between 1.5% and 2% market share rather than 1/2 of market share. So any increase in ownership in precious metals relative to other asset classes has a disproportionate impact on the market.
Yeah, very interesting. That's a real possibility. I mean, it's something that I consider too. Is that from the narrative? Is it possible that people just get so suckered into the response, especially if they're going to merge the Fed and the Treasury? So that's another thing that I wonder. But you said that you made the short-term decision to be selling and waiting rather than buying. And one of the components that you said that caused that was you said the fear was receding. But during your long-term analysis, you don't include fear as one of the categories. But
I do, but I like to measure fear statistically.
Got it. And so do you think that do you think the vaccine and those types of things, people say, well, that'll make gold sell off. Do you think that could have a measurable effect on fear?
Yes, I think it could have a measurable impact on sentiment. I don't think it has any impact on facts at all. Remember that the biggest virus that faces you and I is our government, and there's no cure for it. And if the threat of the COVID vaccine retreats, they will find other ways to increase their power. They will find other ways to steal your savings through depreciation of the currency. So while a vaccine would impact the narrative, impact people's fear in the near term, The place that gold fills in your portfolio really is protecting yourself from your government.
Well, philosophically, I think I need a lot of protection from my government, which would explain why I'm so overweight.
Right. Right. And, understand that while I'm talking about what could impair a gold bull market, that is to say, if the narrative shifted to an ETF, the truth is that there's room for both. There are, in my own portfolios, 10 or 15 companies that are not natural resource related companies that are very, very, very fine economic engines who have very good businesses and whose management teams I know well. And these are not for sale, irrespective of my equities market outlook, because these companies are companies that are selling in the market for less than I think they're worth. So for me, the asset classes aren't interchangeable. They fulfill different roles within my portfolio. I'm, in fact, and I don't want to discuss it much, I'm starting a new business right now, which is a foolish thing to do when you're 67 years old and and rich.
You are a fool, so it fits you well.
But I like the process of creating economic utility or investing in the creation by other people of economic utility. The idea that I would simply emulate Scrooge McDuck and have my whole portfolio in bullion, given how easy that is, and given the fact that I think probably I will do very well, would in fact be one alternative, but it isn't something that I want to do. I've been buying farmland in the upper Midwest. I have for 25 or 30 years been buying water rights. There's nothing in the world that I like better than buying into small, well-capitalized, well-run banks. It's important that you keep all these things in context. The reason that in discussion with you, I keep hammering precious metals and precious metal securities is that most of your audience, that is to say, people under 30 or under 35, can't spell gold. They haven't lived through a market that explains the narrative well enough. And I'm not trying to cause young people to have their whole portfolio in gold. I'm trying to cause them to have enough of their portfolio in gold so that they are sheltered as well as they can be sheltered for what I see as threats to their lifestyle and living standards over time.
So, all well said. So I want to ask you about silver, but I also want to ask you about what I ask everybody this, and you of all people I already know what you're going to say back. You're going to say, I only can speak in terms of probabilities. I can't predict the future, but what do you foresee happening over the next while based on probabilities that you play out in your head? Right now, we got places going to new rounds of lockdowns. You and I both got out of California before the second wave of lockdowns, so we're both happy campers. But we've got that going on. It seems now in high probability that that Biden and Harris are going to be in the office. They've kind of talked about their Fed and Treasury picks, the whole 9 yards. Who knows whether there's going to be a lockdown by Biden? You know, he said he took it back. And so we don't know exactly, but what do you think, in probabilities do you expect? We also got the vaccine, which they say is going to be ready in mass dose by the spring. What do you foresee based on probabilities kind of happening over 2021? Do we stay in our houses like good little cats and dogs, or do they let us back out and people have this vaccine and everyone just starts spending and then the huge inflation happens? Where in probabilities, what do you expect?
I'm not an immunologist or a virologist. I am, however, a 65-year-old, slightly overweight man with some immunodeficient challenges. So I've in fact studied this, Jake. not to say I'm an expert, I'm delighted that there now appears to be 4 efficacious vaccines, including the Russian vaccine. Certainly, given the fact that we have rushed those vaccines, we haven't tested them as well as we've tested former vaccines, there will be some problems in application. There will be some risks. Bill Gates said that you can have a quick result or you can have a thorough result, but you can't have a quick, thorough result. So my suspicion is that by March or April of next year, there will have been enough international distribution of the 4 existing vaccines, which are believed to be efficacious, that we will understand roughly what our future holds with regards to this virus. I am going to be pretty cautious between now and then because I'm at more risk than you are. So that's the fact side. I suspect that the public health aspects, the public health concerns of the virus, will recede for real reasons by the summer, which is great. You know, it's great for mankind. It's too bad that people get sick. It's too bad that people die, all that kind of stuff. The policy response to COVID will continue, irrespective of whether COVID is a threat, because people ask the government to protect them from all means of ills, real or imagined. 2, the dichotomy between equity markets prices and negative real interest rates, which are incredibly bullish, and what's happened on Main Street as a consequence partly of COVID, which is bearish, has not occurred yet. As an example, the requirement by the government that people who didn't pay rent couldn't be evicted. The inability of restaurants and hotels and rental real estate owners, including commercial real estate owners, to pay their mortgages has not come into the market. My suspicion is that January, February of next year, we are going to have the rebound effect, not a pleasant, but rather an unpleasant rebound, as the reality that there are millions of people, irrespective of COVID, whose economic contributions to society aren't valuable enough to sustain the standard of living that they desire, irrespective of COVID, to understand that the damage that was done to the hospitality industry, both in terms of lodging and in terms of restaurants, as an example, that damage has been done but hasn't been paid for. And it has to be paid for. So while I expect that among, let's be honest, rich people and people whose contribution to society generates enough free market value that they are able to sustain themselves, that there will be a substantial relief rally. I will be able, as an example, if I want to visit my young friend Jake, to take a plane, probably by next summer, me having been vaccinated and you having been vaccinated and having a relatively high degree of confidence that we can have a glass of wine together like in the old days. And I think there will be real relief associated with that. But I think the other side of that relief is that we haven't paid for the costs that we have incurred as a society around the virus yet. And so I think there's 2 chickens that have to come home to roost this time.
Well, at least I'm glad to hear you're optimistic about the fact that you think there'll be a semblance of normalcy again in everyday life. The latter part of that, it's amazing how everyone's forgot. It's amazing that the news doesn't tell you that literally there's like, I forget all the stats about the number of people that are behind right now on their mortgages, and not just 1 month behind, like 8 months behind. And a lot of people, like millions of them. And if you look at the videos of the food banks in Dallas, I lived in, right before I met you, we had just moved back, if you recall, from Maui. We had been living in Maui for 3 or so years before Ashley got pregnant. The video there and the numbers back in the beginning of summer, the unemployment was 45% in the early summer. It's got to be higher than that. And nobody talks about it at all. And Biden hasn't talked about it, and neither has Trump. It's like everyone forgot about this. And on top of that, you factor in before the data, 75% of people live paycheck to paycheck, because we already knew that. The average person can't come up with $400 for an emergency. We already knew that. Almost everybody's in credit card debt just to get by. We already knew that. But it worked on this fact that things weren't shut down. So even the people that there's tens or hundreds of millions of people that were hanging on by a thread before this happened, that are middle class, mind you. I just don't know what they're going to do. I mean, I'm like, what are they going to do? Are they just going to say, hey, we have $80 trillion and we're going to pay everyone's mortgage? Or like, what's going to happen? I mean, it's hard to stomach the data, so nobody wants to stomach it. I stomach it. And I cannot believe when you look at this. So what do you think they're going to do?
I think they're going to continue what they're doing now as long as they possibly can. A politician's time preference is extremely high, which is to say he or she wants to do whatever they can do in the near term to stay in power. They don't care about what happens when they're out of office, and they particularly don't care about what people who are too young to vote or unborn care about. So the idea that you will forward shift benefit to older organized voters and back shift cost to younger or unborn citizens, the probability of that is 100%. Remember Mencken's truism, elections are always advanced auctions of stolen property. So the job of a politician really is to defend his or her constituency against other thieves while stealing on their behalf. If you understand politics as transactional in that sense, you will come to understand what they will try to do. They will try to maintain confidence. They will continue to try to steal from young people who believe that they're being stolen for rather than from, and particularly the unborn, which is to say they will continue to borrow money with a 30-year payback period where they were out of office. They will continue the, to them, pain-free process of quantitative easing, which is to say counterfeiting. As long as they possibly can, they will maintain negative real interest rates. Negative real interest rates are a transfer of wealth from savers to spenders, and spenders are much more numerous in society. So if you think about the fundamental corruption of politics, what you will understand is that the current system is at once extremely popular and extremely fragile. So, you need to understand too, that when I act very logically like this, your audience, your younger audience, believes that I'm a perma-bear, which I'm not. I have noticed in my life that our individual creativity and our individual initiative and our individual work generates so much value that it overcomes our collective stupidity. This is amazing. I mean, if you think about, as an example, the response from organized science, be it the Russians, Oxford, Pfizer, in creating this at least semi-efficacious vaccine so quickly, relative to how long it took, as an example, to develop the antiretroviral cocktails that contained, as opposed to cured, AIDS. What you will see is that the ascent of man and the advances of technology are such that even the idiocy of politics can be offset by our individual creativity. It's just that the process, the interplay between the advances that we make as individuals and the chaos that we cause as a collective can be extremely disruptive. I mean, if you think about what's happened in the time that you've been cognitive, coalitions of young people taking over garages in Sunnyvale or Cupertino, and out coming Google, Facebook. Astonishing, truly astonishing, the increases in utility. It's amazing how much more we can do now with less capital, which is a really good thing, because we're redistributing capital from people who earn it to people who vote like mad. So long-term bullish, near-term nervous.
I can't say I can't, despite all of what I say and the fact that my overweight in metals is reflective of my distrust for government and everything else that I kind of said. I'm really not a permabull because I expect them to print a good, in the short term. I'm not. I don't know, sometime in my life, we may get that serious legendary inflation or something, that might be far past when you're gone, but no offense. But so I think though, in the short term, I have my opinions, but what do you see as a response? Do you think they're going to have to do UBI? Do you think that they're like, I saw Citibank, I believe, they were like, now we're expecting an only $700 billion stimulus after the election, and that's all we'll need. And I'm like, what? What do you think? Do you think they're going to go to the moon? Do you think there's UBI? Do you think that's all conspiracy talks? How do you see the response here? Do you think they're going to go haywire on the printing machine? What do you kind of see out of it?
Well, let's do those backwards. Haywire on the printing machine, of course. If they try to steal too much of your money through tax, you object. So they can steal from you by debasing the currency indirectly, which you like. I'm paraphrasing when I say you, as opposed to stealing directly through the imposition of higher taxes. So that one's a no-brainer.
Do you think that's hogwash by whoever? I read Citibank or whatever, and they said, we're only going to do $700 billion. That's all we're going to do now. That was what they said.
Citibank guys express time preference. They earn their bonuses on a quarterly basis, which means that their remarks are geared to people who are transactional in the next 3 months. I'm transactional in the next 5 years. I think the folks at Citibank and Bank of America and Goldman Sachs are extremely smart, but they are trying to generate transactions against a book, and their time preference is extremely high, which is to say that their orientation is 3 to 6 months, while my orientation is 3 to 6 years. So the circumstances that they describe are irrelevant to me in terms of what my particular goals are. While I read them, I regard them partly as opinion and partly as fiction. That isn't to insult them. It's just to speak to their utility. As to what the government does, it's really, truly what they can get away with and what they need to do to stay in power. If you, as an example, pay attention, and I'm, as you know, Jake, nonpartisan. I'm not a Democrat. I'm not a Republican. I'm a anarcho-capitalist. But if you look at what Ms. Harris and Mr. Biden had to say against each other in the primaries, and you assume that they were both telling the truth to the American people as they saw it, the fact that they were able to make a deal and become running mates will tell you an awful lot about the transactional nature of politics. I believe, because politicians are under oath to tell the truth to the American public, that what Ms. Harris said about Mr. Biden, she believed to be true and correct at the time. And I believe that what Mr. Biden said about Ms. Harris was true and correct at the time. The fact that they fashioned a coalition between people who despised each other for the purpose of taking power says everything about their motivation. It has nothing to do with the advancement of society. It has to do with their own tribal agendas. The Republicans are the same with regards to this. The Republican administration has tolerated a populist demagogue, Trump, who, by the way, is no worse to me than Biden, because he delivered votes, despite the fact that the sort of centrist country club Republicans who formed the sort of central elite of the Republican administration, I suspect, despise Trump. They had no second choice but to do business with him in the same way that Biden had no second choice but to do business with Kamala Harris. If you understand, if you examine what politicians say over the course of 2 years, you'll understand an awful lot about the nature of electoral politics. It's about power. It's not about progress. It's not about honor. It's not about ethics. It's about power. It's about stealing for your constituencies and defending your constituencies against the depredations of others.
I think, judging by the overall sentiment in the world right now, if I stuck to that one word, power, and I was as demented as wanting to have you and me be president and vice president, and I thought like that, and I was about power, based off of the sentiment and the fact that also, in addition to that, right, they're Biden, Democrats generally want more UBI, you get more votes from that. So to cater to the audience, there's that. So you would think they would be more inclined to even have more stimulus than Trump would have had. In addition to that, if I was just about power and I didn't care, and I really wasn't a Democrat or Republican, I just was a mask in sheep's clothing to get power in politics, I would think, what would be the best way with the world going insane, everybody hating each other, everybody mad, would be to give them way more money than they thought that they would be able to get. And it would probably cool everybody out if my goal was to further my own agenda with power. And so personally, I expect that to be a tool that is used not only for power, but to try to quell the tensions, and even maybe court some Republicans that are really mad that there's a Biden-Harris administration. So I think that there's to them, if their goal is power, there's an advantage to their own voter base and to the Republican voter base for them to really hit the ground running with the money. Do you agree with me at all?
Given that it's very hard for me to hold them in high opinion, what you say seems very, very plausible. And I need to say, in my declining years, I'm less disinclined to UBI than I was when I was your age. If you fixed UBI to a percentage of GDP, as an example, in other words, you gave the money directly to people, and then you disbanded the entire entitlements infrastructure, which is to say the social workers, the welfare workers, all those kind of people. In other words, you eliminated all the general and administrative expense around public benefit. That probably wouldn't be a bad thing if, rather than paying this vast panoply of, quote, civil servants to be mommy and daddy to the people who are getting benefits, and simply distributed the benefits to them directly. In my declining years, I think that would be less paternalistic and less expensive. Now, would there be problems? Would there be people who got their check every 2 weeks and shot it into their veins or absorbed it into their livers? Yes. Is that any different than the circumstance we have now? No. So, well, my preference would be that people who generated wealth were allowed to keep it and either invest it or distribute it as they saw fit. That's unlikely to happen, at least in most of the world during my lifetime. And it might be, and we aren't talking now about penny mining stocks, but it might be dismantling the public benefit administration that we have now and merely distributing some amount of money that was a reflection of, say, GDP, so it couldn't escalate ad nauseum directly to beneficiaries. I frankly would rather trust the beneficiaries with determining what has utility for them than some well-intentioned bureaucrat or politician, or myself for that matter.
That would probably be the most logical way to do it, which means that it has the least likelihood of ever occurring. But I think the fact is that we're definitely coming to some form of a UBI. I don't think there's really debating whether it's good or bad or how to do it. I do know, however they do it will probably be the worst way to do it. And they won't be calling you for any arithmetically attractive ways to implement it. So I know you're a busy guy. I was just kind of curious, in conclusion, your overall view. I know you got to go. Why don't you give me one thing right now that you're excited or grateful about in your life right now on Thanksgiving, and then we'll go. Who are you looking at? You got to go immediately. Give me a 30-second answer or 2-second answer.
Yeah, I think the discussion that we had last summer is beginning to reverse itself. And I'm delighted that the highest quality juniors are falling with the lowest quality juniors. And so I'm looking to increase my speculative portfolio in precisely the category that had me nervous when the stocks were higher priced. I'm attracted to by the middle part of the market. That is to say, the $5 billion market cap companies that are generating really substantial free cash flows. I'm attracted to that. Had you asked me the question 3 weeks ago, I would have said the energy complex is dirt cheap, way, way, way oversold. It's since rebounded 25% in 3 weeks, and so probably needs a rest. But my overall thesis, which we've discussed for the last year, is just to say 2 bull markets, a precious metals bull market first, and an industrial materials bull market later, meaning a 5 to 7 year run is very, very, very much intact. Value is going to shift in various sectors. And so there will be circumstances like last summer where certain sectors, even ones that I'm very attracted to, become overpriced, and you have to not buy during those periods. When they have fallen in price and they become less attractive to people who are less facile with arithmetic, one must take advantage of that. So, to me, this is all good, Jake. This is a sector that I've spent 45 years coming to understand, returning to being on sale, which is wonderful for me.
I'm delighted that you're delighted, because that means we're headed towards greener territories, actually, because once you start to get delighted, that means that we probably have a positive horizon. So I'm looking forward to that, and thank you for your time.
A pleasure, Jake. Thanks for the opportunity. And may I repeat the offer?
Please do it.
I have enjoyed talking to your listeners and viewers, and I like to incent them to get in touch with me. The way I do that is offering something of value for no obligation. If you like what I have to say, go to a website, sprottUSA.com/rankings. There, you can input your natural resource portfolio, names and symbols, please. And I will rank your portfolio 1 to 10, 1 being best, 10 being worst. Understand that my rankings are harsh. Spirited. I will also comment on individual issues where I think my comments might have value. And I will include, if you put charts somewhere in your request, the Barron's Gold Mining Index chart, which is the most inclusive and longest running gold mining equity index in the world, and a 100-year commodity chart, which will show you pictorially just how cheap commodities are relative to other asset classes in the economy over the last 100 years. I really enjoy doing this, and I've gotten, Jake, from your listeners and subscribers what can only be described as love letters with regard to the lessons that I've been able to teach through this ranking process.
Beautiful. So links right there down below in the description for you to go ahead and do that right now. Hit the like button on either side. Comment down below, Rick Rule rules, and we'll see you next time.